Good morning, traders. Today is Monday, April 3rd. My name is Charles, and this is the Pirate Traders live stream. The Pirate Traders live stream. All right. Well, let's see what's happening in the markets. Well, last week we had a massive move to the upside. The market broke out of a previous balance area. One second here, so let me get that drawing tool up and running. There we go. So we had a previous balance area. The market broke out of that balance and it created some excess to the upside. The way we measure that excess is in the higher highs and the higher lows that the market made continually one day after another. It also left a lot of weakness behind on the way back up. Both of those things are a sign of excess. Excess basically means the market is moving in a certain direction. It has momentum. As long as the market still has momentum, we assume it can keep going. It can keep going. It can shock us how far it can keep going. When the market has momentum, you don't fight the momentum. You let them keep pushing it as far as they need to. Okay, so that is the first thing I'm thinking about this morning. But exactly as I said to the members of the brigade on Friday morning, I am cautious though, because excess does lead to balance, right? You can't have excess forever. The market can't go up in a straight line forever. At some point, it needs to balance off that excess. There's two different ways it can balance off that excess. One, it can use price by pulling back down with price, or it can use time. It can just go sideways at a higher price until it's ready to continue higher from there. Both of those scenarios we have to take into consideration with this much excess. Having had this many days where the market moved higher and having left this much weakness behind in need of backfilling and repair, we should recognize at some point this market will need to balance. So what will give us a clue is the overnight range. Essentially, I see this morning as a chop zone, meaning it will be very hard to predict what the market is going to do as long as it is inside this overnight range right here. So as long as it's above 41.22 and below 41.41, I'm assuming it's just going to grind up and down and chop around and be incredibly difficult to predict what's happening. Okay, so what I'm looking for is what happens when it breaks one of those levels. So the market just opened. If we work our way up, we get above yesterday's high and we start to find support in there, I will assume we have more excess. I will assume that this momentum isn't over and they want to keep it going. If they push below the overnight low and they find resistance there, that will be a sign to me that we need balance, that we don't have the excess to keep it going. In which case I will then ask myself, what type of balance are we getting? Right? Are we just going to go sideways up here at higher prices? Or do we need a larger pullback with price? Okay. So once the market gets below the overnight low, if we find resistance there, I become bearish for what is called monitoring for continuation lower. So basically I'll assume that they're going to keep going down. And as long as they keep finding resistance and they keep going lower, I will assume that they're going to keep going lower and I will trust that momentum. But at whatever point they find support, I'm happy to change my tune instantly. So if they push below that overnight low, we get some resistance. They start to head lower and suddenly they're finding support and it seems like they don't need to continue. Well, then I'm happy to just let the market go sideways the rest of the day. Okay? Because they could choose to balance off the excess either by pulling back with price or by just going sideways. And then, of course, the third scenario is support above yesterday's high, which means the excess is just still going. And I want to be a bull. So for now, we're in a chop zone. Let's chop it up. Chop zone. If you have not yet, please smash that like button. We got 105 people hanging out, but only 25 likes. Surely there must be at least a few of you that appreciate finding out we're in a chop zone, so you don't start jumping into longs and shorts first thing in the morning and get your face ripped off. Come on, get after that like button. So once again, just to review, after you smash that like button, if the market is able to get above 41.41 and find support there, I am bullish for continuation higher. If they pull below 41.22, I will be bearish, looking for continuation lower. In between, your guess is as good as mine. Good morning, $6 million man. Philip, Juan, Scrapper, The Shaw, ES Trade Monkey, Gino, 7 Mile Reach, Novice Trader, Scooball, Laura, Nap, Tim, Frito. Frito says, heck, I'll throw you a like. Are you so sweet? Appreciate you. Mike, good morning. Andrew, good to see you. Darth Liquidity. Limit. Zhuk 230. Chillin' with Dylan. And Pavel, welcome. It's also worth noting I consider the low right now to be weak because they only went 1 tick below the opening price. Now, that doesn't mean they can't push above the overnight high and find support and continue higher from here. They absolutely can. But it's just one signal that they're probably not ready yet. That likely there are still some buyers that want to do business in here that haven't had a chance. So as we head up to test yesterday's high and that overnight high, the question becomes, do we look above and pull back in, or do we find support? Having left that weak low behind slightly increases the odds we'll pull back in. Let's see what happens. David Cooper says, do you have a cheat sheet for setting up the TPO charts? I can just run you through it right now verbally if you want to write this down. So I use 30-minute TPOs. So each letter represents a 30-minute time period. I create one profile for the regular trading hours. That is from 9:30 a.m. to 4 p.m. New York time. And then the other profile is from 4 p.m. to 9:30 a.m. That's the overnight. So I separate 30-minute TPOs into 2 separate profiles, regular trading hours and overnight. My point of control is based on the TPOs. It's based on time. And my value area is based on the TPOs. It's based on time. And my value area is 70% of the range. I also have my tick increment in 2 tick increments right now. So for the ES, each letter that you see actually represents half a point, 2 ticks. All right, so now I'm watching the ticks over here. That's this little chart in the bottom right. And the reason I'm watching those ticks is because the overnight inventory was neutral. There was just as many buyers and sellers. So when we opened this morning, whoever took charge of the ticks was the person taking charge of the market. So if the ticks opened and started pushing higher, that would be a sign that buyers were in charge. If the ticks opened and started pushing lower, that would be a sign the sellers are in charge. So now that we got to yesterday's high, I'm curious, are there more buyers or sellers in this market? And so I'm watching those ticks. If they can hold them above the zero line from here, that is new buyers, which would be bullish to see. Can they hold it? It might feel boring, but what's happening right now is very important. If they're going to keep this momentum going on the daily, if they're going to keep making higher highs and higher lows and just crushing it, they should find support up here at yesterday's high and be able to keep going. Do we have buyers? Do we have momentum? Dylan says, I want to go long above 38, but I know the PMI numbers are going to do something whack. Yep. You're right at a previous day's high, begging for a look above and fail, and you got a weak low. So if you got any reason to be nervous, better to wait. We're still in a chop zone. Okay, ticks did not hold, and the support at yesterday's high did not hold, increasing the odds. The chop will continue. So we're probably coming back down through that opening price once again. Looking for support. Debt Sacks guy. How does Bookmap look? Right now, I don't see anything interesting in Bookmap at the moment. All right, we have some buyers stepping in. Can they hold it? All right, well, there you go. I didn't think it was going to happen, but that is buyers. So I am now bullish as long as we remain above the halfback at 41.38. You got support at yesterday's high. You got the ticks holding the zero line. And you got a when what should happens doesn't. They didn't come back for that weak reference. All of those things are bullish. So now can they hold the support? The shock, can they hold it? They held it. They held it. Can they hold it on the next one? This is just the short squeeze. When they come back, will it hold again? It should. The bulls are in charge. Scott, can you take me higher? I mean, I'm not going to try to do Nickelback. To a place where the sellers lay. Can you take me higher? Where the buyers take profit away. Oh, Creed. Oh, Creed. Shit. Yeah, you're right. My bad. But really, Nickelback and Creed. Really? Is there any difference? Got 131 people hanging out, 70 likes. Thank you so much for those likes. Appreciate you. I assume not all 131 of you are members of the brigade. Is there anyone that's new who just discovered the channel? If you have questions, feel free to ask. Don't sit here and be totally confused about what you're looking at. Just ask. Amir, what is the meaning of life? Oh boy. Bruh, it's too early. It's too early. It's to love and be loved in return, man. Novice trader, entry and exit. Entry, yesterday's high. Exit, 41.57. Let's pop over and take a quick look at the NQ. Okay, NQ not quite as bullish as the ES here today. They too had excess last week, massive excess to the upside. Their overnight traded inside yesterday's range, just like ours did, but they're still in the chop zone. They have not broke free yet. So you're looking to turn literally support right here, 13,230. You're looking for that support to hold. No support on the Q. Less bullish to see. Chill Dylan says, guess some people took profit at 41.50. Yeah, I mean, partially. It may have also just been short covering, and we just ran out of shorts covering. All right, so the ticks getting smacked down right there is less bullish to see. The way they kept the price above yesterday's high, and they fought and fought and fought to keep the ticks above the zero line. Then they finally broke. So now we need to find support here at the halfback, 41.41, and get those ticks back above the zero line to keep the momentum going. We don't want to pull back down into yesterday's range. Looking for those buyers. Mike says, is that why you ideally want to wait for a second test of support to enter a long trade? No. In my experience, the first test of support is buyable. And if it has to test 2, 3, 4, 5 times, you just have to sit and wait. As long as it doesn't stop you out. You may have to keep testing and testing and testing. It can be very frustrating. But you just keep reminding yourself, who's in charge? Are the buyers still in charge? Are there still more people choosing to go long above yesterday's high? That's new buyers. Only one thing new buyers want, and that's the price to go higher. So if there's more of them, they'll get what they want. It just might take some time. So this is obviously those numbers. So we're waiting for the liquidity to step back in on the Bookmap here. All these colors to step back in, and that should give us an indication of who's in charge. Very unusual activity right there. Somebody went short 2,000 contracts at the low, at the B period low. Weird. All right, now we got a poor high. That increases the odds. The market is going to come back up and take out that high. Taking out that high would be bullish, as it would be getting the initial balance to the upside. Okay, there's the repair of the poor high. So now we have the initial balance to the upside, which is a little bit bullish to see. We also have the value area up against the high of the day, which is a little bit bullish to see. We are pushing up into resistance between 41.55 and 41.60. So that will give us a chance to see what happens when the sellers, or sorry, when the buyers get smacked down? Do they step back in again? Let the tug of war begin. Bot versus bot. Push it up a little, push it down a little, push it up a little, push it down a little. Oh, the down bot won. Invictus says, frustrating. I was looking for a smoother and faster push to 4163. Well, will you be upset if we slowly melt up there? Better late than never. I will get over it as long as my runner gets hit. So I assume what that means is you moved your stop on a majority of your position. It pulled back down, stopped you out, but you've still got a runner. And so you're hoping that runner will work. I would say that's a good strategy. Having that runner just in case. Well, not to put a bee in the bonnet of the bulls here, but I'm not liking the way Bookmap is looking. It seems like all the longs up here are shorts that are being forced to cover, and all of the large position taking is short. So it seems like the new position that's being accumulated up here is to the downside. So obviously the market is still bullish. We're still expecting continuation higher, but that is a bit bearish to see. It was 3 times in a row they did that. Massive amount of shorts right here at the low. Another massive amount of shorts again in the same place. And then a massive amount of shorts up here at 41.50. Whereas if we look at the longs, they're mostly just shorts that got stopped out. So that's not new buyers. It's new sellers. New sellers at the high is not bullish to see. So just one piece of data to keep in mind. Mark says the widget to your bottom right on Bookmap shows the Iceberg balance. 2,400 contracts to the sell side. Ah, I see. Yeah, yeah. There you go. I would say I am now only bullish as long as we stay above yesterday's range. So we got to stay above 41.40. If we start to pull back down into yesterday's range now, that would be bearish to see. So I am still a bull, and I still think we're heading up to test 57. But if we pull back down into yesterday's range, I'll change my mind. I just really don't like the way the Bookmap looks here. Generally, if you push above the previous day's high and you start doing new business above the previous day's high, you'd like to see more of that business be buyers. But yet it's sellers. Ed says, before noon or on turnaround Tuesday. Is Tuesday a turnaround day? Have I been trading all these years and I never knew? Scooball says, who the hell places stops above and below icebergs? It's almost always taken out. Two answers for you. One, retail traders that don't know what icebergs are. And two, computers. The bots put their orders there because that's how bots do it. They have to have an exact thing. They have to be programmed to put their stops somewhere. And so they pick the previous high or low. So it's one computer going to take out another computer. And we're just stuck in the middle, watching it all happen. Darth Liquidity. Why can't computers just get along? Why can't we all just get along, Darth Liquidity? I'll tell you why, Darth Liquidity, because there is both a dark side and a light side to the Force. Okay, so it was a lot of work to get up here, but we are now up here testing this resistance between 57 and 60 up here. I do suspect the market is about to get smacked back down. So now I'd like to see them hold the support we just created around 41.48. If that breaks, that would be, a sign that the momentum is coming to an end in my mind. Just because of how hard the market has had to work to get up here, and the fact that the NQ is still inside the initial balance, still inside the overnight range. That's less bullish to see. So to my mind, the bulls just put in a ton of work to get up here. The only way they're going to keep it going is if they can just keep doing it. So if 41, let's call it 46 breaks, that's likely the end of the momentum. But as long as they keep building support and pushing higher, they can keep it going. So once again, can they hold it? All right, so the C period just created a poor high. A poor high increases the odds that the market will push away from the high, looking for support to come back and repair it. Repairing the poor high at this point would be the beginning of a trend to the upside, which would be bullish to see. We did leave behind some single prints in the B period that need to be backfilled. So creating the poor high increases the odds that we will try to backfill them, and we'll see if we can. Looking for support at 41.51. Ed says, I am shocked by those monthly charts, both lines and candle. What's so shocking? Yeah, what's the shock? On the monthly, barely anything's changed. We're still inside this massive balance. But I see what you're saying. If they can keep it going, and it's still a giant if, then it would look like the market is rolling over to the upside. But they could just as easily poke above and come crashing all the way back down. So let's just take it one day at a time and see how long they can push this momentum. $6 million man says 2 to 3 trading zone, bull flag. Yeah, well, that's the thing. What's crazy about that is imagine what the upside would be if that's the case. And I'm not over here making predictions. Okay, I'm not over here being a crazy perma bull. But just for a second, think about what kind of a move up that would lead to. So just imagine if, what we were dealing with in here. Let me change the color. What we were dealing with in here, is something like one of these right here. Or one of these right in here. Or one of these in here. That next move could be a juicy one. But let's not get ahead of ourselves. Miles and miles to go before we sleep, and miles to go before we sleep. We could still have multiple years of sideways ahead. Andrew, did I see CL this morning? I did not. I saw some people talking about it on Twitter, though. Yeah, boy. That's a gap up. Now, if I was an oil trader, I'd be short here, though. You're pushing right into previous resistance, right? This is a previous balance area high. And you left that massive gap behind in need of backfilling. So to me, again, if I was an oil trader, I would be looking for a look above and fail that comes back in to fill that gap. All right, so moment of truth. We're now testing the B period base of single prints. There should be support there. And with the poor high we left behind, there should be a magnet to tug the price back up. So let's see if that happens. Well, no support there. So we got this little node right here around 41, 48. Potential buyers there. Truman says, after watching Dalton all weekend and being here for a while, it's starting to make sense finally. That's all it takes. You just got to get it to click one time, and then you see it every time. All right, well, no support at the base of the B single prints. No support at the node at 48. So the last chance the bulls have is to hold it above 41.45, the halfback. If that level breaks, I go to a neutral stance. As long as we remain between halfback and the opening price, I would be neutral. And if we pass back through the opening price, I'd be bearish as a look above and fail of the previous day's range. But for now, if they can hold that halfback, I remain bullish. Can they hold it? Dun dun. Dun dun. Dun 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 dun. Uh-oh, weak C period low. Not good. All right, there you have it, folks. We're back below halfback, so I am back to neutral. The only thing that would get me bullish now, we'd have to get back above this node around 48 here and turn it into support once again. And only seeing it hold as support once again would I get bullish. Otherwise, it seems like we are out of momentum to the upside. So I am neutral while we are above the opening price, as we may just go sideways inside the initial balance for a little bit here. But if the C period or any subsequent period comes back through that opening price once again, we will likely begin to trend lower, which would be extremely bearish to see, right? A look above and fail of the previous day's range would be bearish. A trend to the downside would be bearish. And then we'd have to bring up what we started the day talking about, which was all the weakness we left behind last week. Single prints that need backfilling, and then tons of weak references that need to be repaired. So I'm neutral, and I'm happy to let them just chop it up for a while here, as long as they stay in the upper end of yesterday's range. But if we pull back down through that opening price now, likely we need to start heading back and backfilling some of this weakness we left behind. So I would become very bearish down there. Sitting on hands mode. Waiting for more information. Thank you, the Shah. Appreciate you. 86, 89 likes. Yeah, we're so close. Bullish on likes. Scooball says, was it a news-related sell-off? Not that I'm aware of. It was funky at the high. There was a lot of weird stuff happening up here. If you were paying attention to the bots, you had much, much larger contracts going short than long. So it seems to me that it was short covering, and we've just run out of shorts covering. So now I see us going sideways while we, play tug of war and try to decide. And either they get back above this node and they decide to go higher, or they get back below the opening price and they decide to go lower. Let's see which it'll be. Invictus, the bots knew we were long. The bots don't care about us. The bots are trading with hundreds of contracts a second. They don't care about us at all. Nap says 41.41 was the previous range high from December. Do you think this makes it significant area? 41.41 didn't jump out at me specifically. Oh, I see what you're looking at over here. Yeah, I mean, so for me, I'm looking at this kind of bigger picture as a larger, over the last few months, a larger balance area. And so you can't have an exact level for a balance area high. It's somewhere in this area. And if that's the case, then no, we've only just begun to test that. The Shaw, all I want to say is that the bots don't really care about us. Yeah, you're right. Like I said, I had this conspiracy theory going for a long time that the bots were programmed to fuck retail, that they were like engineered for it. And now I've just come to understand that's not the case. They're just doing their own thing. They're playing their own game against one another. And it is an inhuman game. It doesn't function the way humans do. So it seems like they're always coming for us. It seems like everything's a trick to try to fool us. It's not. It's just, it's the bots against the bots, and the way they operate is just very confusing for us because we don't think like they think. So I really feel like we're just the cannon fodder in the middle, not the target. Coop, when elephants fight, it's the grass that suffers. Shit's deep. Okay, so seeing this iceberg sitting here at 35 is actually bearish to me. Obviously, it's currently acting as support. But why is it there? What are they doing? Right? They're trying to get short-term traders to go long in here and put their stops down there. So the iceberg being there, while it is currently acting as support, once it breaks, will likely break the market lower. And like I said, if we pass back through that opening price, everything gets bearish very, very quickly. Mateus says the Q is one time framing down. Oh boy. Oh man, with a poor high too. Whoo! They do not make it easy. Look at that. What a nightmare. All right. So yeah, I mean, you are one time framing lower, but you're still inside the overnight range, and you just left the poorest of poor highs behind. So I wouldn't really get bearish unless you got new selling below the overnight low. I'd kind of see this as choppy still. But if they poke below there and then get new sellers, yeah, for sure. They're taking it lower. So this brings to mind that question that we talked about earlier this morning. If we know the NQ has all this excess, okay? If we know the NQ has all this excess, and we know that they don't have the momentum to keep it going, which we now, feel that way since we have the initial bounce to the downside. So we have a signal that that momentum is running out. Well, then the question is, how do we balance off that excess? Do we really need to pull back with price? Or can we just go sideways at higher prices? So that's why I say I need to see that new selling below the overnight low to really get bearish, because we may just be going sideways at higher prices. But that resistance would tell me to start monitoring for continuation lower. And back to the ES. So there you go. They just took out those stops. 298 longs just got liquidated. It's beginning to look a little bearish, at least on the short term today. The buyers have disappeared. The sellers are suddenly here. Can they hold the opening price? Okay, so now that we printed the D period, you could keep an eye on that for the NQ. Oh, never mind. I was going to say you could use cessation as the sign the trend is over, but obviously if you get back to the high, the trend is over. As you were. Truman, how did you see at 145, 41.45 by looking at the profile that there was a weak C low? I don't recall. A weak C low would have been the market stopping within a point of the B low. All right, well, we are still technically in that zone where we could be going sideways, but to me, the week will now pour low means we're going to break the initial balance to the downside, which would be bearish. It would be bearish because it would begin the momentum down as the beginning of a trend down. It would also be a look above and fail of yesterday's range, which means we're likely to need to pull back at the very least to backfill the first weakness. So if we break that A period low, we're trending lower and monitoring for continuation to the downside. As far as monitoring for continuation to the downside goes, if we went down to the overnight low and found support there, or to the base of these single prints at 41.08 and found support there, if we came down to either of those levels and were able to turn around from there, that would tell me the market's balancing off that excess sideways. So that would be less bearish to see. But if they break this 41.08, then yeah, look for a big pullback. Truman, C period stopped at the B period low and bounced up a few ticks. Was that enough to label the C weak? Yes, sir. If it's able to get within a point of a previous reference and not any further, it's weak. Mark says short covering weakens the market. Dalton 101. So without new buyers stepping in, we got to look for buyer levels. Correct. We had all this momentum that got us up here. Just day after day, we kept trending higher and higher. We had all this momentum. Well, now we got the signal that momentum is over. Okay, we've pushed it as far as we can push it. It was short covering that got us that very last little step. Now it's over. And there's no new buyers up here. So what does the market need to do? It needs to find new buyers. Now, it may just go sideways up here and spend enough time to bring in new buyers up here. It may need to pull back down with price, looking for those buyers at a lower level. We will just have to wait and see. All we know for now is the momentum up is over, leading to either sideways or pullback. Pavel, a big pullback would be better for the market. No, in terms of balance and excess, it doesn't matter how the market balances it off. If it gets excess to the upside and it just goes sideways and then it goes higher, that's the same exact thing as if they get excess, pull back with price and then go higher. It's the exact same thing. One is no stronger than the other. It's just in the first one, you found the buyers up here. In the second one, you had to come down here to find the buyers. In both scenarios, you found the buyers. That's all that matters. Mark says, I also judge sentiment by reaction to the news. When good news equals no run or down, bullish sentiment, bad news equals no run or up, opposite. I think I understand what you're saying. So if the news should be bullish and should make the market go up, but it doesn't, you see it as bearish. Yeah, that makes sense. Pavel, we are technically uptrending when we have a higher high and higher low on the daily. Yes, sir. But that's what's so great about market profile, right? If all I had was candlesticks and I was looking at the daily, I'd be saying, this is bullish. This is so bullish. Higher highs, higher lows. But because I have market profile and I recognize how the auction took place, if it was really bullish, they would have kept that momentum going. So when we broke that momentum, we knew it's not bullish. And it won't look bullish probably at the end of the day, but we got the signal first. There's also the idea that we could go sideways today and then continue the momentum tomorrow. Right? We could just stay up here the rest of the day, go sideways, and then come tomorrow, start heading up again. That's possible. Less likely, in my opinion, but possible. Flavio, thanks for the sub. Welcome. David says, when you say that time regulates, do you mean that time regulates how long a price is allowed to advertise at? Yeah, if it were me inventing this stuff, I wouldn't use the word regulates. I would use more the word like confirms. So the idea is that if price moves to a new location, so price moves from here to here, okay? The next question we want to know is, do we spend time down here? Do we come down? Does price move from here to here and then it instantly comes right back up, spending almost no time? Or does it move down to here and it stays down here and it just keeps grinding sideways, spending more time, right? That's the question. So the areas where the market spends more time, it is likely to bring in more volume. So the next question, the next confirmation is, do we have the volume? So the price moves to a new location. The time keeps you at that new location. And then you see that you're bringing in volume at that new location. That tells you the market is likely to continue in that direction. Whereas if the market pulls down and doesn't spend any time, well, then it's not likely to keep going. Or if it pulls down and it spends time, but it doesn't bring in any volume, it just keeps tapering off at the low, well, then it's likely to go right back up. So price advertises, time regulates, and then volume measures. It just gives you an order to observe to figure out who's winning and losing. David says, how is the POC determined? So it is whatever level the market spent the most time closest to the center of the range. So for example, right now we have 3 TPOs going across down here, but then we also have 3 TPOs going across up here, and this one is closer to the center of the range. So that's the POC. But to be honest, right now the POC doesn't matter. POC only matters when the market is rotational and we're trying to understand what is the fairest price to do business. Right now, we are not trying to figure out what is the fairest price to do business. We're trying to figure out where will the market do business, meaning will we keep trending lower or will we do business here? So right now, the POC is literally worthless. I'm not even paying attention. It doesn't matter. Right now, I'm focused on the momentum, the one-time framing lower. Once that's over, then I'll go back to thinking about the POC. But until then, the POC is just noise. It's just extra information. Don't worry about it. Stay focused on momentum. Who's in charge? What are they trying to do? And how good of a job are they doing? There you go. So printing a 4th TPO down here with the E period, we have pulled the point of control down. That is bearish to see, as that is what you would expect to see when there's momentum to the downside. All right, this is setting us up for something we call a low-risk short opportunity or a one-time framing trade. The idea is very simple. The market-generated information right now is telling us it wants to keep going down because we have a trend lower. So if you wanted to get short, where would be the best location to do it? Well, right here within a point of the D period high. So if you got in just now at that E period high, you're only risking a 1.5. If you just got in now at the E period high, you're only risking 1 point. If the trade works out, bare minimum, you're going to get to the D period low and probably much further. So you'd be risking 1 point to potentially make 9 points. That is an asymmetric opportunity. Now, they don't work out with a high probability, meaning you'll lose most of the time when you take them. But when they work, there is so much reward for such little risk, it makes it worthwhile. All right, moment of truth. Can they hold it? If you're in the short, you're in for only half a point of risk for 9 points of reward. Well, that was annoying, but there you go. They held it. The market continues to trend lower. Now what we want to see is we want to see ourselves get back below that opening price once again. And that should start the momentum going. And there you have it, the end of the trend. What a huge trend that was. Yay. Okay. So what that tells us is, finally, the market is giving us some insights about what to expect today. The tug of war is over, and the winner is more tug of war. Woo! So what this tells us is that they tried to take the market higher this morning, and they could not do it. They tried to take the market lower, and they could not do it. So likely the highest probability scenario now is that the market will just go sideways. Okay, this is that version where we can balance off the excess created by the trend on the daily by just going sideways at higher prices and not necessarily having a larger pullback. Okay, so when the market opened and we pushed above that overnight high, there was a chance we could get a continuation of the momentum if they were able to stay up here and keep going. So when that failed, we knew that wasn't happening. It's not going to keep going today. So then we were looking for, is it going to go sideways or is it going to pull back? Well, now getting cessation tells us it's going to go sideways. So the highest probability from here is rotation. But Charles, the market never seems to rotate all day. It always seems to break out one way or another at some point. I do concur. So I feel like the market is going to rotate at least for a few hours here, but then we will likely get some kind of move at the end of the day, either a spike up or a spike down. But I literally couldn't guess for the life of me which it will be. So for now, I am happy to trade this as rotation. I'll be looking to short above value for a rotation back down, or go long below value for a rotation back up, keeping in mind that we have a poor high, so we may need to look above and fail first before getting that pullback down to the POC. But otherwise, just assuming rotation. And whenever they break out, if they get above that C period high and they find new buyers, I'll get bullish. Or if they get below that D period low and they find new sellers, I'll get bearish. But in the middle, sideways. Sideways it is. With that, I will bid you all farewell and wish you a joyous rest of the day. And if you're a member of the brigade, we will see you here tomorrow morning. If you're not a member of the brigade, there's a link in the description. It only costs $10, and you get to hang out every day for the first hour. Something to consider. Thank you for the 105 likes, and we'll see you next time.